All right, guys, we're going to run through a trade recap of my trade from yesterday on the live account. This was a very simple 2 p.m. Po3. I'm just going to get right into it. So, yesterday in the morning, I was on live and mentioned how I would be looking for previous day and previous week high as our potential targets for the remainder of the day. Right, 10 a.m. had opened up. We had essentially no manipulation leg lower, and we pushed up straight in towards these targets. Right, so it's very important to understand the narrative as a whole. Okay, the narrative here was bullish until previous week high, and then I start to be bearish. Okay. And that is exactly what I was looking for coming into 2 p.m. You can notice how there was a little bit of time distortion right here, right around 2 p.m. And then 2 p.m. opened up. We manipulate, and then we expect a distribution leg lower. So um, you can see here on the daily time frame here as well, right? Clearly bullish into these levels at the bare minimum, right? And then we can, go from there. But the overall narrative is what I kind of wanted to establish before we push down into these lower time frames. So bullish until previous week high, and then we start to be bearish. Now, um, I also was looking for Friday to be bearish, right? Now that it's Friday and I'm recording this and the day is over, it very much was bullish. But yesterday coming into today, I was expecting a bearish day, right? Because this is a classic bi-weekly profile. With a classic bi-weekly profile, you expect a TGIF setup on Fridays, which is a return to the mean, right? What exactly does that mean? Essentially, it just means that we're going to have a red day on Friday whenever you have a bullish week. Okay. So this is just the narrative uh, that I had to be bearish for the Friday move, right? Now, um, we end up coming in towards this 2 p.m. candle with this little consolidation leg. So I'll drop down to a lower time frame. You guys can see it a little bit better. We have this little consolidation right here. Right, so this is your original consolidation. All right, now before I open up the 2 p.m., one thing that I want to show you where I got this trade from is back here. We had a 5-minute order block. Okay, right there. This is Wednesday, April 9th. So 5-minute order block, take that, mark that out. We go from the bottom of the wick to the top, or sorry, bottom of the body to the top of the wick, extend that out, right? There were really no other PDRAs here. You can go to like a 15-minute, right? Not much there on a 15-minute. If you go to the hourly, again, like there is nothing there on the hourly either. So the 5-minute is what I had to resort to. Now, keep in mind, 5-minute does not have an aligned time frame, right? Does not really have an aligned time frame. The lowest time frame PD array you can use an aligned time frame with is the 15-minute. So you cannot use the 1-minute here as a change in state of delivery entry. So I'm really just looking for a limit entry as long as we have SMT up here and everything else that I'm looking for is present. I would limit sell or even market sell up here. Now, um, this is us coming into 2 p.m. So I'll drop down into the 1-minute. So you guys can see this a bit clearer. And let's start. Okay, so this is the 2 p.m. candle. And again, no lower wick. This is similar to the 10 a.m. Now, a lot of people are going to look at this exact scenario and be like, okay, if this is the science behind why you're bearish for the 2 p.m. candle, why were you not bearish at the 10 a.m. candle? Well, the answer is very simple. The draw on liquidity, right? So the draw on liquidity in the morning was the previous week high. And that's why I said the narrative was bullish until previous week high and then bearish from there. So in this case, we push up towards the previous week high. The narrative has been met. The daily objective has been met. We can now start to effectively look for shorts. Okay. So from this point onwards, once we hit the previous week high and we get a candle like this, a 4-hour candle like this, I am now looking to potentially short that, right? And I will get into more of that in a bit. So you have a little bit of a consolidation leg. I mean, not too much is going on. The 2 p.m. low, again, no real manipulation here at all. we start pushing up towards this 5-minute order block. Now, I noticed that we were going to have SMT inside of this 5-minute order block. So what did I do? I took a limit and I placed it directly above, I believe my entry was 20s. So 20 right there, directly above the CE of this order block, right? Why the CE? Because the CE is generally, CE, if you are not aware, is the midpoint, right? That is generally a very, very strong area that price needs to respect on any PD array. It doesn't have to be an order block. It could be a fair value gap breaker, whatever. But the midpoint of any PD array is a very, very important area for price to respect. Okay. So when I go over here to the 5-minute, you guys will see that the 5-minute is fairly strong coming into this order block. Do we expect, just think about price signatures that you've seen for a second, right? Don't try to think super logically. This is just simple price signatures. What I like to see personally when I am looking for a rejection at a PD array, for example, is I want to see a high get put in, and then I want to see us sweep that high with a new candle, right? So, let's just say I'm going to have it sweep the high right there, and then I want price to deliver lower from there, right? I don't want price to just simply come up into this with a super strong candle and then expect the following candle to just dump, right? That's kind of unrealistic. So that's what I would like to see. You can see this pattern like happen over and over and over again, right? We have a low gets put in here, we sweep the low, and then we reverse, right? Right here, we have a fair value gap. Before, that this candle pushes higher, what do? We sweep the low, and then we go higher, okay? What happens right here? Sweep the low, and then we go higher. And I can give you a million examples that look exactly like this, right? Before there's a nice reversal, you're going to have a candle that either breaks the low or the high and then reverses. So that's what I'm looking for. I'm not really looking for price to have a super strong candle up towards that and then a rejection, right? Like, this is what happens when you use the ladder, right? You have a high that gets put in. This candle does not sweep the high. It gets an immediate rejection, okay? Does not reach into this swing low and then immediately pushes higher and liquidates anybody that was short right there, okay? So that's what I'm looking for here. Just context, right? And I'm looking for a 2 p.m. low target. So I believe this was super choppy. So this is around where I'm starting to be like, okay, this looks really good because the CE is up here and we are closing these candles underneath that CE, right? So it gives us a strong conviction for a candle to then go up here and hit the CE, wick down, and then the following candles go lower. So this wasn't as clean as I imagined. I actually thought I wasn't going to get the entry right there, but I kept my limits in anyways, because again, this is setting up for some engineered liquidity, right? This is engineered liquidity is like, whenever you have a series of highs like this coming up towards a PD array, right? But none of them are really hitting this PD array. And then eventually you're going to have the candle that takes it and then goes lower, right? So that's what I am talking about when I refer to engineered liquidity, right? So again, not really much going on here. Right here is where I get filled, okay? Again, the engineered liquidity portion, right? Mainly what you want to see is on the time frame that you drew the PD array from, you want to see the bodies of that specific time frame hold the CE of said PD array. Okay, so in this case, I have the 5-minute order block. Therefore, I want to see 5-minute candle bodies continuously close underneath the CE. If at any point these candles close above the CE, I am starting to think that I'm going to get stopped out, right? Because that decreases the probability of my trade working out. Clearly, buyers are a little bit stronger than sellers here, okay? We get the sweep one more time. Again, take a look at the bodies, right? What are the bodies doing? The bodies are respecting the CE. This candle at one point was above the CE, right? Because the wick's all the way up here. Where does it close? It closes all the way down here. This is a bearish candle, right? There is no, from this high here, right? from this high, there is no closures, zero closures above this high. So this is absolutely engineered liquidity. Okay. I'm going to drop down to the 1 minute here. And this is, I believe, where the trade starts playing out. Yep. There you go. Okay. So super clean. And that's where I took my profit. And then shortly after that, it reversed and continued higher. But I got my piece of the pie right there. Okay. Now, I will show you guys in a second what exactly this looked like as far as the trade itself. Okay, so here's the trade itself on TradeZella. All right, this was a, you guys look down here, this was a 5.99R realized. It was 6.08R, which I'm not sure why, because I realized the entire thing. So this is the trade. Okay, shorted exactly where I showed you guys, the 20s, and took profit at the 259, which was the 2 p.m. low. Okay, so that was my entire trade. Super, super clean trade. $200 on 2 micros, 60 points, 486 ticks on this trade. And that is a quick breakdown all the way from the start to the finish, from building the narrative to building an entry and getting the actual entry model. And just so you guys get a better look at like really how clean this was as far as Po3 goes, you can see on the 5 minute, you can see it very, very clearly. You have your accumulation, manipulation, and distribution legs, right? I'm going to give you a second to see if you could see it, right? And again, it's not always this clear cut and concise. A lot of the times it might be a little bit choppier, right? But in this case, you can see it very, very clearly. So we have obviously our original consolidation leg right there, okay? That's our consolidation leg. Let me go ahead and turn that off. There you go. So this is our consolidation leg. You can see price is trading inside of a range, right? So this is clear consolidation. Whenever you are trading in a range like this, underneath a PD array or above a PD array, right when a 4-hour candle opens, you can anticipate that we are going to most likely manipulate into said PD array. And this theory doesn't really require much context, but over here for this specific trade, obviously, we had some good context, okay? This is going to be our manipulation leg right here, right? Obviously, being the fact that this manipulated into where we wanted it to go, which was the CE. And this would effectively be our distribution leg, right? So when you look at this, this is basically what a picture perfect PO3 setup looks like, okay? So there you go. From the narrative to the bias, right? Building the bias and framing the entry and then the actual entry itself. There you go. That is the trade recap.